What's happening, guys? I hope everybody had a good weekend. First and foremost, before I get into scan, thank you to everybody that participated in the Avidity Fitness Challenge. There was like 25 or 30 of you guys that showed up. So far, I think this is the fourth one this morning. Like I said, anybody that goes to 16 out of the next 24, $500 donation goes to Traders for a Cause. So kudos to anybody that signed up, but most importantly, anybody that signed up and showed up. So I appreciate you guys taking the time to do it, and hopefully, the soreness and the way you feel after is beneficial to you, because I know that a lot of folks were talking about how they haven't moved this much in ages. So anyway, BBBY was the exact conversation that we've been having for weeks regarding max stop and thin markets. And, all kind of came to a head this week. And this is exactly why you need that max stop. Some people may say, that's crappy risk management. But 99.9% of the time, I have really good risk management, right? And I stop out on something that I'm wrong on. I'm not scaling into it. I start into it. If I'm wrong, I move on. If I'm right, I scale into it. If it starts to go the other way, I adjust. I size down. But there are those outlier moves that will catch you off guard. Probably happens 6 to 10 times per year. And those 6 days to 10 days per year could be a complete game changer to how your year ends up. And, I've encouraged this over the years to go back and look at, your 5 worst days. And your 5 worst days, if you had a max stop, how much more money would you have? And this week was a perfect example of that. BBBY hit my max stop, which I did a presentation last year in Vegas on it. And I've actually brought my max stop down by about a third. We've been talking about that the last couple of weeks in the Traders Lounge. And as we've been talking about the importance of it, especially in this market, when you've got meme type moves, AMC and BBBY and FUBO and just all these names that are just going crazy out of nowhere, which I think is probably ended at this point. Cohen killed that, and everything else is starting to come in as well. But my max stop hit on BBBY, and it was the best stop out that I could have asked for. And the reason why I have those max stops is because it's in that moment where you think that you can get yourself out of this situation where, 99.9% of the time, risk management's good. I wouldn't even be in that situation. But the time that you are in that situation, what are you going to do about it? Are you going to be a robot and just stop out? No, you're already in the situation. You didn't, right? So you're already in a kind of an issue where you didn't expect to be. And unfortunately, most times, we want to scale into that trade and kind of figure ourselves out, like figure out how to get out of this thing and hope that if we size up, it goes in our direction. Well, what happens if you size up and it goes in the opposite direction? Well, guess what? As it's already ripped up and you're on the wrong side, that's probably the slowest part of the move. What happens is that it starts to exponentially build because everybody's doing the same thing as you. And once everybody realizes like, oh boy, this is not doing what was expected, then away it goes, right? And it's not the first dollar that hurts, it's how fast the next dollars come. And the first dollar is quick, but 2, 3, 4, 5 comes even faster than that first dollar move. And that's, proof in BBBY move. So at any rate, I started in like 1650 to 1750. It's basically a 17 average. And kind of working into that like we talk about the box in the room where, it's not about getting the top or slamming into weakness. It's about, averaging into the area that you want to participate in. Like, what is the general area that you want to short at for that trade to kind of prove and then continually scale from there? So I had started to kind of scale into that, and then it ripped up. And, I had added some, and I'm like, man, this could be either way. And so it ended up going that one more shove, and it stopped me out. That was the best thing that happened because it went up another $5 or $10 or whatever. And you know what? What that did is it gave me the ability to come back, as you guys saw, and crush the late day move. Had I not stopped out when I did, I probably would have been in a situation where, you know, the opportunity cost, like we talk about, I would have been, you know, not coming back up to the plate. You know, I would have been a little bit probably scared, a little bit nervous, a little bit unsure, risk adverse, and I probably wouldn't have come back into that trade with confidence. The hardest part for me as a trader personally is that outlier move and that first stop. You know, coming back into the trade later on, I personally don't get emotional about, you know, oh, I got to get it back. I got to, you know, I've got to double down and you know, I don't know, win. You know, I don't care about that. So that part of it, as far as if I need to adjust my stop, you know, to be able to come back in, you know, I can give myself another little bit of wiggle room. But that first stop is really what is either going to, you know, save me or take all my money from history, from past. And, you know, that's something that I recognized probably 4 or 5 years ago. And it's something that I've continually, you know, worked on and kind of fine-tuned what that number is and where I need to stop. And last week was a perfect example of sort of the best case scenario, how it saved me and how I was able to get that, you know, next unwind into the close plus the next day and keep that confidence firing on all cylinders in this kind of market. There's nothing worse than having a trade like that take a bunch of money and then being afraid to step up to the plate, you know, on all the next trades, because the market takes also gives. And unfortunately, when it takes, for a lot of people, they just kind of give up, shy away, get nervous about coming back in because they just got smoked. But if you can prevent that, then you stay on your A game. And in the market that has those kind of moves that, you know, are absolutely outlier crazy squeezes, well, guess what? As soon as it turns, there's going to be plenty on the backside. And you saw that with Fubo and AMC and just about everything else, you know, CVNA even, Mara, you know, all these Bitcoin type moves. So just remember that you want to stay firing on all cylinders as long as you can, because it compounds more than you know. And whatever that number is, to keep you there without changing your sort of emotional state of mind, should be your max stop. And, you know, some people were a little bit confused about, okay, so if you stop out max, like, how can you get back in? My personal issue, like I said before, is that initial stop out, because and again, it doesn't matter. It could be 1,000, could be 10,000, could be 100,000, right? But that first move is minimal compared to how fast does 100 grand become 300 grand, 500 grand, or 900,000, right? Very, very fast after that first 100. After the initial move, the next move is crippling. So for me to sit there and try to figure out that first move, maybe get myself out of it, maybe it works sometimes, but is it reckless behavior, and is it setting you up for disaster when you get that next BBBY move? And that's the thing, is a lot of people do size into that move and do get let out more often than not. But it's that one trade that does not let you out that cripples you and takes back all of that and more, and, you know, takes away your confidence and your conviction, and, you know, you're back to, you know, not firing on all cylinders and just trying to, you know, weasel your way back to the top. And there's nothing better than staying in the current mode of firing all cylinders. And so that is a perfect example of stopping out, having a max stop, why it's important, how it helped me, and exactly what we've been talking about for the last couple weeks. And I knew it was coming. It's just a matter of time. I like to push when the market's like this. But you also have to save yourself from yourself. And again, to wrap this up, go back and look at your worst days in 2021, even 2022 at this point, 2020, right? Add up your 5 worst days. or 10 worst days. And if you brought your stop to X, how would your year have turned out? And would you maybe have had different swings or more aggressive positions had you not, had huge losses and then trying to, slowly grind your way back? That's the opportunity cost portion of, that. So anyway, VLCN I wanted to go over. AMTD, if you guys watched Scan last week, that was monster. Big swing trade there. I don't really have any swing trades on right now. I'm not really comfortable with any longs at the moment. I own a couple, but nothing. I don't really have any exposure on. AMTD was the last one. Came right into range. Worked perfectly. I wanted to go over a new trap that I noticed. I wanted to talk about VLCN levels and two other notes. Thin tape is changing. So we've been talking a lot about tape being extremely, extremely, extremely thin. Swiping up and going nuts, consolidating and doing it again. That's just the course of, kind of blowing out all these, options traders and shorts and, compounding those shorts into, bigger positions and blowing them out. To me, it's changed. To me, it's thicker tape this week. Selling is back. I think a lot of this entire money flow and excitement and FOMO comes from how AMC and BBBY trend. And obviously they're coming in. We've got the X dividend date or whatever on AMC. So I do anticipate that AMC, any good pops are going to get, faded. Hopefully they put out PRs and people buy into it. But in my opinion, prior to earnings, we were here. We already thought that it was already a big move. Then it squeezed out the crowded trade, and now people, all excited about this dividend, which is obviously nothing. So, and last point was scrolling back through old charts. So any scan that I do, any of these videos, you can always look back, click the description and click the link and you can see the charts. But I always go back for, a week or two and just scroll through stuff. Sometimes people ask me how I come up with different things on Scan, but it's the same FinViz settings that I've always gone over. But I also go back through my own personal scans, and because Big Charts continually updates, I can go back and just scroll through for the last week or two and see, oh yeah, that looks good. That's setting up, and then you can set price alerts from there. So, all right, let's get into the second portion of Scan. And I do have a couple things to go over, and then we'll get right into thoughts for the week ahead. All right, guys, so for the second part of Scan, as always, I'm not a financial advisor. These are not buy or sell recommendations. It's for educational and informational purposes only. So if you're here to be told what to buy or sell, you're in the wrong spot. If you're here to understand what makes a potentially good trade, what I believe is good risk versus reward, and how I look for things to set up, then you're in the right spot. If you are again looking for somebody to tell you what to buy or sell, I would just turn this video off and have a good rest of your weekend. All right, so I wanted to go over a couple things. First thing, I got 2 questions in from YouTube. Like I said, if you leave a key takeaway and then post a question, I'm happy to pick a few each week. One of them was dating back to a coin trade that I had when I chose an area to stop out, such as 109. If your short trade on coin had actually started to blast through that level, how would you adjust? So basically is the question. And so I usually wait to see something blow off, and if I participate, it'll be small. And then I want to see it continually come back and test key levels. As it continues to fail, I will continue to scale. If it were to have like a fast rebound back up, then I would give it a second to kind of see what's going on. And if it stays firm, then at that point, I'd probably adjust and size back down to either the starter or all the way out. And you can kind of figure that out pretty quick. And like we've always talked about, most of the time you actually do have plenty of time. It's just unfortunately a process for us where we're like, I was just up a lot. Now I'm flat. Now I'm down a little bit. Maybe I'll try to figure this thing out. And then that's when, trouble starts. So make your plan. For me, it was 109 over and under. So it would be probably plus or minus a buck. If we started to base and firm up at 110, I'd probably move on from the trade and look for a better opportunity. Most of the time, people try to force their original thesis to play out instead of paying attention to what the trend's saying. So you want to be cautious that you don't do that. Other than that, another question was, Nate, you seem to have an incredible sense of current market conditions, which you update some weeks but not always. What do you need to see to change your mind on conditions? Is it a change in the way the duration of runners or what time of day they put in their tops, et cetera, et cetera? So it's just really based on kind of like the FOMO indicators for stuff like AMC and BBBY. So, if you're coming into the market and BBBY and AMC are continually squeezing out, then, you should probably have your chase happy, pants on and go for it. If they're in the gutter and they're fading, then I'd probably be looking for pops to get faded. If there's a lot of momentum, if there's a lot of small cap runners and they've been continually breaking out and running up pre-market and breaking out, then you probably want to be step back and wait for things to settle down and then join the trend. So it just depends on how hot is it. Is it a pre-market running market, or is it something that you need to be cautious out of the open? As far as the market itself, overall SPY. I'm typically looking for the same, exponential kind of moves where it's just steady without any big correction. Because I know that when it does pull back, it's going to be, aggressive. And so typically I'm looking for the same stuff on the daily chart, basically steady candles without any major correction. And, corrections are healthy, where stuff comes back in and goes back up, comes back in, goes back up. That has longevity. But if something's just up, and starts to blow off, that's when I start to get interested. But as far as, sensing market conditions, you can kind of get a feel for market euphoria. And, typically I post that kind of stuff. And also, I don't know what the term, maybe panic or whatever, to the downside. So, getting a good sense of both sides is really where my opinions or my biases will change. Otherwise, just let it do business as usual and don't try to, predict something. If it's grinding, let it grind. A lot of times we try to force a trade in the grind and then you end up getting caught. So I always look for those really, really big moves and leave the rest alone and don't have high conviction trades, market related names. 90% of the time it's those big exponential moves, the market kind of when the market's a little bit inefficient, and we can take advantage of that. All right, so I want to talk about this VLCN trade. This was a fantastic opportunity on Friday. Very nice levels in the room, and just sort of wanted to discuss how I traded it, and how you can kind of stay out of this end of day kind of to squeeze out. So, you can see that my levels that I gave in the room was 310 and 270s. And the reason for that was we got some good information over here, a lot of back and forth. There was a lot of volume and shares that were exchanged at that level. Then it did it again over here, and then it did it again over here. But 270s, you can see, was basing, right? Each and every single time. If it's not breaking down by 10, 11, or noon, then what's going to happen? It's keeping all the shorts in, everybody's up, but it's not really breaking down. So if it does start to get back up and over, VWAP comes back, checks in, what happens if it doesn't break down? Everybody's going to panic and cover, right? So for me, I let it blow off, and then as it comes back and confirms under 310, now you have all these breakout buyers and you have all these covers that came in. So then there's nobody left to really bid. So that is a picture perfect, sort of anticipating that end of day sort of squeeze out It is anticipating the fact that 270s is going to hold, being proactive about your covers, and not getting emotionally twisted in the sense that you get oversized, you cover into 310. You scale back in 270s, you cover into 310s. That is what I see a lot of people doing, and it's easily avoidable if you just draw the lines. It's the easiest, simplest thing to draw these lines. It will help you see the big picture and take a step back and sort of let this trade work, or at least be a little bit more clear exactly where you're actually entering. So that was one big thing. And then one other thing I wanted to go over was this GCT example. And let me just say this again before I even say it. I'm not suggesting it's the next HKD at all. What I'm suggesting is there is something very similar that happened, and it's worth noting and worth paying attention to for the next time when we see these sort of IPOs go crazy. So HKD obviously had a monster move. One other thing that I wanted to talk about was a new trap that I've noticed, and just to kind of be aware of it, see it, and kind of see how they are trapping traders. And most importantly, the key takeaway here is I do not think that GCT is the next HKD, but what I want you to take away is how to sort of identify and see this trap and be aware of it on the next time. So for example, this HKD had this huge move and it flushed out after the IPO. Came back up, they let kind of shorts win, and then later on in the day, starting at about 3 p.m., they walked it up into close, and then they let it just kind of come in and start to kind of fade off, right? And that was it. And obviously, what happened from there. It started to go nuts and, up to $2,500. Very unique outlier kind of opportunity. However, what I want you guys to see is that we had a very similar situation. And this was, we just had this IPO on GCT. And you can see same sort of situation. It IPOs, flushes out. You've got that crawl back up. They let shorts win. And then guess what? 3 p.m., they walk it back up and then they let shorts win. Everybody feels great. Shorts feel great. It closes at lows. Yeah, told you so. These, idiot chasers, blah, blah, blah. Well, were they buying back to float? Were they letting shorts win to hold over? And then what happens? The next day, we have a big morning move. And away we go. It never breaks VWAP. So it gives a great opportunity, especially off open here where it squeezed up and then came back in. Everybody gets confident because it goes down, down, down. But what do? They held the prior lows, right? This prior level here, 24s and 25s. And then even later on in the day, if you just drew a line across, you can pretty much see that they were basing it at 4180s or so, maybe even a little lower, 4130s. But you can see that they're holding it higher. So we make decisions based off seeing this price action and all right, it slammed down. Now it's short on all pops. But they're just kind of creating that illusion because there's no real float. It's still tightly held. It's got a ton of volume. Meanwhile, they got all the shorts they wanted. And they probably know that they're in a good position based off the action from right over here, where they sold a bunch, hammered, the shorts come in, they hammer it, come in, re-hit it again. They feel really confident about this. This is after hours. And then all of a sudden, oh boy, it's going again. So you can see that happened on HKD. And that was right before everything started to go crazy. And just to go back to that real quick. And again, I'm not suggesting that it's going to happen again, but I just want you guys to start to get familiar seeing these kind of late day moves and these comebacks. And, again, it's just the same sort of action and most importantly, the same time, 3 p.m., the day before things started to get a little funky. So think about that. Be aware of that. I saw that and, now I'm aware even more so for next time that maybe I can get long on a situation like that. So anyway, let's get right into action for this week. OXY is always a phenomenal trade. This was probably the easiest trade off the Buffett news on on Friday, but of course, I didn't trade it long. I traded this parabolic move, and it offered a fantastic opportunity for me. I typically have really, really good entries on OXY, but what happens is typically I try to like maybe be too patient or scale into the trade or look for more. And this is not a trade to look for the big picture until it continues to break down and you just kind of ride a stop. If you are in sort of go mode, there's great trades along the way. Like this is a big trade. This is a big trade. And this other one over here was a big trade. Big trade opportunity, but only if you took it. Because if you're trying to scale, if you're trying to be patient, you're trying to turn this into a monster win, then you know what? It's already going back up towards highs. So it's, as much as these videos are to kind of share, good information, hopefully, it's also a reminder to myself where I know how I typically trade this name. Typically, I overstay after a really, really good entry. So it's a reminder to myself just to be a trader on it. Take the advantage of the big parabolic move, but most importantly, be there when it pulls back, and you'll probably do just fine. DNAA, monster move. This one pinned shorts big time after hours. This was just a Discord pump. This just ramped up, and it was on low volume, pumped up as, kind of the next big thing, and then everybody got backed. So that's sort of what happened during the day. And so what I believe happened is it's easy to borrow. So everybody that, kind of shorted the pump, was up nicely. And, everybody that bought it was bagged, probably exited in the close, maybe held their back hold, who knows. But then after hours, it had the redemptions information started to come out. So everybody was like, it's 250K float or whatever. And so in my opinion, given the fact that it was so easy to borrow, I think that there was a lot of shorts left. I think that a lot of people looked at this first move when it comes back up and they're like, oh yeah, this is way too much of a move. I'll put some on. And then this action right over here, this is a very no-brainer kind of like, I'm just going to lean into this. And then all of a sudden they get smacked again, and it just never, gives up. So in my eyes, it's just sort of a after hours kind of squeeze out. Everybody kind of exiting before 8 p.m., which it gave a fantastic opportunity right before the close. I figured that there would be a kind of an intense cover into 8 p.m. and then it probably, puke back out. So be cautious of this one. It's very thinly traded. I would expect, a bunch of circuit halts, but it should be a good trade regardless. But I would not be surprised to see this thing completely unwind all the way back down. That's not to say that it can't go, 20, 30, 40, 50 first, or, well, I guess it's at 40 now. But that's not to say that it can't do something crazy. But I do think that it's going to find its way back. Just be cautious. Be cautious with size. It's a good avoid if you're new. But it did offer a really nice trade on Friday, as you guys saw. BBBY and AMC, obviously, kind of two peas in a pod. Higher the better. Failed follow through would be ideal. Pretty much the same stuff every single day on those. And, looking for the big picture move. If you try to force it and find it and try to trade every single move, you're going to get chopped up. But thinking big picture, what would make this a good trade? It's been a phenomenal opportunity each and every single day. And I think it will continue to be, especially if BBBY continues to go back to, something like 5. And then after all this ape dividend stuff kind of settles, I think you're going to see a really big opportunity. GCT, I think that we'll probably see a gap down. I wouldn't be surprised to see it in 38 to 40 range. But I'd love to see it in the 50s. I would absolutely love it. I think that if it was in the 50s, it'd probably be a good fade back. I think that this was all short cover. You can see that it was steady. If you just draw kind of a trend line under here, and then you can see that it kind of shifted and, you've got selling pressure into the close. So in my opinion, I think a lot of people were nervous. Oh, this is the next HKD. I don't want to run into after hours with this thing short. So they used all of this action as sort of the exit. And because of that, I do feel like we gapped down, but be cautious. Anything's possible with these. And if there's something that has a lot more volume, and better opportunity, then it's just going to go off radar. For whatever reason, everybody wants to nail the big crazy ones, but can you actually have heavy conviction on those? And the answer is probably no. And if you can't, then why are you wasting your time? CVNA, this was a nice one from Friday. Friday's idea was higher the better for failed follow through momentum. I think that we can continue to fade this thing until it holds over VWAP. So typically the cheat sheet that I use on these is as long as it's bumping against VWAP and staying heavy, then I like it for a short. If it's over VWAP, then forget it. Mara, same deal with Bitcoin, pretty standard. Nice opportunity on Friday as well for joining that one down. LMND, I saw on my scanners Friday, steady fader. So I'd be watching kind of all relief bounces versus something like 26. Same thing with Snap. Really nice trader. It had a steady rebound from this day. I wouldn't be surprised to see it go back. This was earnings, obviously. But I'd be watching possibly puke back out under 11s. Siga, worth seeing. The daily grind. It's been a fantastic trader, just like Veru. Veru was amazing. I did not expect that big of a pullback. I wish I had actually sized. I scaled in on Thursday, and then I look back. I'm like, man, it's down $5 per share. I never added enough. It was a great trade, but it wouldn't have taken that much more to add, a bit more. I just was focused on BBBY and other things like that. And last but not least, continuation side, I've just got some charts. MSPR, I own a little bit of. LMFA, I don't own any, but liquidity trap potential. And then NEPT, also liquidity trap potential. Again, liquidity trap does not mean that things are going higher, that they have to go higher. We just had one on G something, I forget what it was. But, if it goes back and tests that prior level and there's volume, then a lot of times that might just be the exit and it just kind of fades off. So just be aware if you are, I think it was GBOX if I remember correctly. Yeah, so you can see here, liquidity trap type setup. So you're coming in and you can only see this portion of it. Move over. So you can only see that much of it, right? So if it was to build over this prior level of 2, right? So if it starts to build over here, then we have a potential of, that squeeze out mode. But instead, we came right into it and stuffed, and that level stayed heavy, and therefore, it unwound. So I don't want people to think that liquidity traps are just longs no matter what. A lot of times, like DMS, I was watching for it, where you've got this huge volume, 28 million, then nothing, and, we came right back. It did base for 2 days, but we did not hold over any of the prior resistance levels. So therefore, it's not something that you need to sit there and say, this is supposed to go. It's a liquidity trap. That's not the case at all. Liquidity trap is just which ones have the potential of having a secondary outlier move. And then once they prove, that's when they start to come. So anyway, that's it for this week. John Smith and HAI on stock. You've got t-shirts for this week. As always, just leave a like and a key takeaway with the timestamp in the comment section. And if you want, you can add a question on with your key takeaway. But that's all you got to do. We give away scans, we give away Icon meals, we give away t-shirts, we give away IU, all for free. So that's it. Have a good rest of your weekend, and we'll see you tomorrow.